I'm one of those people that loves the tax conversations. I'm very my producer, my podcast producer calls me a nerd all the time, and I'm okay with that. So I'm happy to share what knowledge I can. Hopefully, a few actionable steps that audience can take.
Yeah, and just in case people haven't listened to the podcast, tell us just a little bit about your background, Eric.
So yeah, so I was I always get the question, well, why would a male advisor, work with primarily with women? And it really comes down to my story. And I was raised by a single mother. She was actually divorced from my biological father before I was even 2 years old. For whatever reason, he chose not to be part of my life at that point, and I never really had any interaction, conversations at all with him. And I always think about, what my mom sacrificed to give me the life that she did. It's being a single mom is, especially with a child that young, it's no small feat at all. And so I always think about what she gave up, what she had to do to make my life as normal as possible. But part of that was also my grandparents being such a big role in my life. And unfortunately, my grandfather, the man I actually call daddy, because when you're 2 year old and everybody else calls him that, that's what you call him.
Right.
But he passed away when my grandmother was 62. So I also saw the challenges that she faced being widowed at such a young age. And she actually turns 91 a week from today as we're recording this. And so she's been a widow for almost 30 years of her life. So a third of her life, she has been, I'll call it on her own. She's got family around her, of course, people that care very much about her. But that's not an easy journey when you're
Right.
doing things on your own. And so that's really what my inspiration was, is to be there, be that trusted advisor, to walk alongside women who have gone through these major, major life events, to help them when they don't have that other person to say, well, what should I do here? What do you think about this?
Right.
To be that person where they can share those ideas and those dreams and those goals, and have somebody that can provide guidance and advice for them that they can trust, again, to walk along that path with them.
Yeah, and so first of all, I love hearing that about your grandma and all of these amazing things that are going on. And it is. I've been both divorced and I am a widow, and so I know some of the challenges that are there. And I was very fortunate because my dad was a very strong component of you got to learn to do money, you got to learn how to plan, you got to learn how to save, and we had financial conversations. Now, I know a lot of women my age and older that wasn't necessarily what happened in their family, and it was just kind of it wasn't anything like abusive or horrific in the family, but it was quite often stereotypically men took care of the money, women took care
Mhm.
of the household. And,
Yep.
and so it wasn't any way trying to exclude people. It was just the way things were done of a certain generation. Do you find
Mhm.
that's changing a little bit though?
I think it's changing to an extent. I think as you start looking at the younger generations, as more women are becoming the primary breadwinner, as more women are starting businesses, there is definitely that shift. There's always that conversation about the wage gap and the difference in what women make versus men. But there are some stats that show that for younger generations, that gap is narrowing some.
Right.
But I think that's really where the many of the women we work with are still in that, that 55 plus area, where that's still not necessarily the case, where those conversations aren't happening. Again, like you said, it's not good or bad.
Right.
It's just kind of the way it is, where the men handle this, women handle this. We have these roles, kind of these identities of what the woman did, what the man did, or what does. And unfortunately, that's where, even thinking about the complexities of retirement planning and how do I turn my nest egg into an income, regardless of how much time you spent doing this, even if you're the man, this phase of life is not easy.
Right.
When you think about the tax implications, you think about Social Security decisions and not understanding how all these things ultimately fit together.
Right.
But the negative is always the fact that we think about life expectancy as well, and women typically outliving men. So if the man handled all that and the woman didn't take an active role, they're the ones that ultimately are going to get impacted most significantly.
Right. Right.
And so it's just a matter of being there, being willing to ask questions, step up, take your seat at the table, so that you're not in that position where you just feel lost at the end of the
Right.
day.
And that's the thing is I think, you don't have to go out and do a degree program like you have done and put hours and hours in, continuing education credits and learning new
Hmm.
strategies and keeping up with the tax code and everything. You can turn to a trusted advisor like Eric, who is going to work in your best interest. So what I want to focus on today, because this is tax day, officially we're recording this on April 15th, and
Perfect, right?
you're going to be listening it to the next day, April 16th at the earliest. One of the things that I think is important, particularly for women going through a divorce, is there are tax implications to certain things in divorce, certain things if you were widowed, different kinds of investments, all of these kind of things. So I'm going to ask you one question that I get all the time, and I don't know
Okay.
the answer to this one. So I'm interested in this one. I know there used to be this thing that if you got married at a certain time of the year, there's a tax benefit for everybody. Is that still in effect? Is there the ideal month to get a divorce for your tax reasons?
Not necessarily. Because here's kind of the challenge you have to think about when it comes to whether you're getting widowed or whether you get widowed or you're divorced is what is my filing status going to be in the year of, and what is my filing status going to be the year following? And that's really the tricky part because when you get divorced at this point, if you're divorced as of 12/31, you're going to be filing individually. And so that's really where your tax situation can change drastically and really where you got to bring in the right professionals to help figure out what's my situation going to look like. Because if you're talking about, splitting of assets and splitting of potential income sources and things of that nature, your tax situation changes drastically from one year to the next.
Right.
And what do I do? How do I know what that impact is going to look like? Or if you're getting widowed, it's, there is, I hate to call this an advantage, but the year that you become widowed, you can actually still file married filing jointly in that year.
Right.
And so it does actually present some tax planning opportunities. Unfortunately, we've actually dealt with that last year in 2025 with a couple of clients who have gone through that exact scenario. And as the advisor, I got to say, okay, when's the right time to approach this topic? But you got to think about, realistically, tax wise, there are some steps we probably would want to consider, and that just makes that much more challenging. We've got this an emotional scenario already, and now we've got to throw financial stuff on top of it.
Right.
It can be overwhelming, to say
Well,
the least.
so I've got to say, my husband passed away in May, the year that he passed
Mhm.
away. And I had no idea that I just assumed, well, now he has passed. I notified Social Security, did all that
Mhm.
stuff. I just assumed the next year, that year's taxes I would be filing as a um filing
I
single,
say that.
but I
Yep.
wasn't. I thought I had to continue to file, and I didn't realize there was going to be tax benefits. I didn't talk to anybody, and I probably missed some opportunities there. Like I know I missed some opportunities. So reaching out for that is really
Mhm.
important. But in divorce, it really doesn't seem like it makes a whole lot of difference as to the month.
The challenging part about divorce is you got to evaluate the relationship between the two spouses, the two parting spouses, right? Because there are going to be situations where you might say, hey, for both of us, it might be better to wait until January to get divorced because of certain income scenarios that might play out. That, hey, we had a really high income this year. It's going to be different next year. Maybe we should stay married finally jointly for the current tax year and then get divorced next year. But that isn't always,
Yeah,
it really depends on the circumstances. You got to
right.
say, if there's at least some level of communication, some level of collaboration, then maybe you can make those decisions, but it's just not always the case. Um, but again, that's really where, as you're going through that process, consulting with the right professionals, whether it's a third party financial person going to help it's there to be, an objective third party as you're determining what's going to be the split of assets and what's going to be the split of income. Having those things out there in as far down in advance as you can, so you could make that decision potentially. It's just that's not always, there's not always that level of communication to say, well, I just want this thing over. I don't care what the tax situation
Right.
is.
But sometimes, if that number is big enough, you can potentially, I mean, you can just kind of slow things down until it gets, if you're both in agreement with this, of course. But if there's significant monetary incentives to to
Well,
do
and that's
it.
that's where I think having an awareness of your financial situation. I shared the story. I mean, even the last time you and I were together, we had a lady reached out to us in November, I guess it was, and saying, "Hey, we're getting divorced. We've been married for 20 years. We got an 18-year-old son. I've been the stay-at-home mom for our son for that time. My husband's had a financial advisor the last 20 years. I've never spoken to him. and she had no real feel for what they really had. And so when you start thinking about, well, are we going to split the house? Am I going to get the house proceeds? If we're going to sell the house, am I going to get these IRA assets versus those 401k assets? But that's a real point of, I would say, contention around saying the difference between selling the house in the current year, where maybe you are filing married, filing jointly, versus selling a house in a future year where you're filing single, where again, bringing up the tax conversation that we wanted to share in this episode, the difference between saying, okay, I've got a $500,000 exemption for primary residence when we're filing married, filing jointly, versus only a $250,000 primary residence exemption if I'm filing single, that can make a huge difference in what you actually get left over when that house is sold.
Right.
And that's really where understanding what the circumstances are, and again, hopefully having the people on your side to say, well, hey,
Right.
yeah, that proceeds of the house is going to be a reasonable amount, but it could be much less if we do this decision versus that decision. So that's really where, again, having the right people on your side are going to make a huge difference.
Yeah, and that's that capital gains tax
Yep.
exemption, right? That
Right.
it literally cuts in half if you're single. So
Right.
now there are some, I've seen some mediation settlements where it's very cleverly integrated in there that the one spouse will compensate, not perhaps the full 250,000, but will compensate in some way, so that if the spouse that maintains the house wishes to sell, they're not taking the whole hit. But again,
Right.
how are you going to arrange that negotiation? You got to have something to offer the other party to
Right.
make that go. So
Exactly.
maybe
And
you
it
have
takes
to,
the advanced planning. And that's where
yeah,
bringing it, whether it's a
yeah,
coach, it's a financial intermediary, it's whoever it might be, you got to know that that's an option beforehand.
right,
And so it starts with understanding, what do we have? If you're making that decision to get divorced, you got to have at least some understanding of what our financial resources are, so that you know what questions. Again, it's not necessarily knowing the answer, it's what questions do I need to ask?
right, right. Let's talk about another one, Eric, if you don't mind. And
Mhm.
again, I'm just going to throw this out here. I forgot to mention at the beginning, we are just providing education and information. We're not providing any specific information about what you should or shouldn't do, and you should consult a professional before you move forward in anything in your case. So
Yes,
I
absolutely.
just like to throw that right in the middle so nobody can say, well, I didn't hear her say that. So, um, Eric, let's talk about the whole idea between like a lump sum settlement for a divorce, or spousal support or maintenance paid out over a period of time. Is there some tax implications that people should think about with that, or is it all non-taxable income now, or how does that work?
Well, so you're looking at a couple different things. So when you're talking about lump sum, ultimately depends on what the source of that lump sum is. So are we talking about, IRA accounts versus a brokerage account? Are we talking about a 401k account versus a cash, just a big savings account, right?
Right.
So those tax implications have to be taken into consideration. And I think that's really, again, where this advanced planning becomes so valuable, is saying, okay, if an IRA account is a big part of what I'm going to receive, number one, how old am I? Am I under 59 and a half? What are the implications there? And then also knowing that when I start drawing that money out, if I'm using that, especially if we're talking this gray divorce phase of life where, you're 50 plus, or maybe you're in your retirement years, and this is now going to be my primary source of income, saying that, well, if I get $1 million in an IRA, it's not really $1 million, because when I take it out, it's going to be taxable.
Right.
And so what am I actually going to get to live on? What's my spendable income going to be? And again, not to keep harping on the advanced planning aspect, but that's really where you want to have, as you're going through that divorce process, having somebody who understands retirement distribution rules and understands. I always throw Social Security in there, even though you can't negotiate Social Security. Understanding what your Social Security situation is going to be is critical,
Right.
because that, for most people, most women, is going to be their sole source of lifetime guaranteed income that actually will go up every year because of inflation.
Right.
And so again, it's not something that you can negotiate, but you need to understand the implications. Am I only going to be eligible for half of what he's receiving? Or am I going to actually be eligible for something on my own record? Or what are my options? What are my filing strategies that I need to think about? And then putting together, again, it really comes down to putting all the pieces of this puzzle together in a way that is most effective for you. But understanding those tax implications are so critical, because again, it's what am I going to have to spend versus what am I just getting what's the check going to be,
Right.
right? So
And
I
and
think
I
that really
think
becomes a critical component.
yeah, and that's what happens, I think, at the mediation table or even when you're talking with your attorney. Numbers get tossed around and numbers can look great. But then, like you say, you
Mhm.
don't understand because even now, again, this is my ignorance showing, but there's different kinds of IRAs, right? So there can be like the traditional or the Roth, and that even
Yep.
makes a difference, right? Whether you're gonna, how much you're gonna be
Yes.
taxed when you start withdrawing it.
What I would say, even the difference between on a from a pre-tax perspective, looking at a 401k versus an IRA as you're going through the divorce process, those have completely different treatments as well. So yes, they're both taxable, but my access to those funds based on my age is different.
Okay.
So that's really going back to the example I shared before of the lady reaching out to us and saying, "Hey, I'm not really sure what we have," and I had to be careful about what I couldn't really give her much specific recommendation. She hadn't hired us, but she kind of shared what the thought process was or what her attorney was considering, and it was okay. Do we go after the 401k or do we go after the IRA? Well, in her case, she was in her early 50s. IRA money again, it's still 59 and a half, whether it's coming out of divorce or not. Now there are some rules you can access that money without the penalty, but they're very restrictive. Versus a quadro arrangement with a 401k might actually give you access to those resources before 59 and a half, the
Right.
QDRO. And so that's really where, again, planning wise, you got to understand where's the money coming from. How much I'm getting is always a critical component,
Right.
but it's
Right.
how do I use that ultimately is the biggest question. What access am I going to have? Is it going to help me pay my bills or not? Especially if you're in a situation where maybe you also have, there is a house that, you got to still think about, well, how long is it going to take to sell the house?
Yeah.
How long is it actually going to be available? How long is it until I can actually use those resources to fund my lifestyle? It's again, how do I put all these pieces of this puzzle together?
Right. And you can be, what's that saying? You can be house rich and cash poor. So you've got,
Absolutely.
you've got investments. And I've seen this happen with women where on paper they look good, but in real life, they're literally barely making it between payments of things because tapping into any of the assets they've got is it doesn't make sense and it doesn't financially make sense. They're going to be paying more in penalties and they're going to be ultimately be
Right.
realizing from that.
Well, and that's kind of the stereotype is especially in this demographic of the 55 plus of the woman always wants to keep the house
Right.
regardless of the circumstances, and it's just not always feasible based on, okay, am I going to be in position to actually pay the mortgage? Am I going to be in a position even to pay the property taxes?
Yeah.
I might have this great house, but if I don't have enough income to even pay the property taxes or the insurance on it, I'm not going to be able to stay there very long. And
Right.
the guy always wants the investment. They want to keep their 401k, they want to keep their IRA because they worked to get that,
Yeah.
right?
Yeah.
And if you really think about it, especially in this case, again, coming back to my example before, yes, he was the breadwinner, he was the one making the money, but you can't really say that was any more important than what she was doing by raising their son
Yeah.
for the
Yeah.
last 18 years.
Yeah.
So what is that really worth? We see all the stats about what's a stay at home, what should we be paying our stay at home mothers? But again, it comes down to the value to the family itself. And unfortunately, when you're in that situation of divorce, that mindset just changes. We start thinking about other things. Money makes people do, crazy things, as they say.
Right. Right.
It just becomes a challenge to figure out what's the right solution.
And I see a lot of cases where, like maybe joint accounts, like maybe they've had a small side business or something, and they do have like an IRA or they got something set up for that. But then let's say the husband is the moneyed spouse and he's got a pension through his business. I know pensions are kind of
Mm-hmm.
fading out, but there's still some people that have
Right.
pensions and where that person becomes like, nope, you're not taking my pension. That's mine. I earned it. I worked for it. You didn't do anything for this.
Right.
And there's no understanding that yes, but the only reason you were able to work is because
Right. Right.
the other partner was doing all this stuff at home. And then you're right. How do you value that?
But I think again, that's really where you got to have the right people on your side. You've got to have whether it's an attorney that's working with you, again, having the financial person stepping in to say, hey, what's this worth? What's that worth? But saying, if based on my circumstances, what is my lifestyle going to look like? Am I going to be struggling to pay the bills
Right.
and going out? We got to figure out what's a reasonable split.
Right.
And if you're going to say, hey, if you're getting all that pension, I want all the retirement money. I want the
Right.
401k and the IRA. So
Yep.
it's
You got to
just
be
you got
able
to
to
figure out what the right balance is.
and you
And
gotta you gotta be comfortable advocating. Like, don't go in there. I see
yes,
so many women that like, well, I just want to be fair. Well, fair means standing up for what is fair
Hmm.
for this situation, and it's different for everybody. I get that. But Eric, are there any other tax issues or common mistakes or miscalculations you see women specifically going through divorce? I know you work with women who are single and women
Hmm.
who are widowed and everything, but specifically for those going through divorce, are there any tax mistakes you
Well,
see?
I think the one thing, so there's something called would refer to as the widow's penalty, and I didn't come up with it, but it's a term that's out there. But a lot of the implications apply to women going through divorce as well, and it may even be more damaging to some extent because you think about what the widow's penalty is says that, well, there's two of us, one is passed, and now I might have the same amount of income but be in a much higher tax bracket because I've gone from married filing jointly to filing single now. Well, there's a lot of those same variables apply to women that have gone through divorce, but now you may only have half the assets.
Right,
But depending on the circumstances, you might end up paying, depending on if we're talking, a higher net worth family, you might have some of the same challenges that a widow does, and thinking about, I might be in a higher tax bracket, I might be paying higher IRMA surcharges. So it really comes down to, again, planning and understanding what are my resources, what are my needs, what do I want life to look like, so that, again, we can start putting these pieces of the puzzle together and understanding that that needs to be done well in advance. Now, the other thing I'll throw out is, actually we have this new tax law that's out there. So I think it's also understanding some of those details that we need to be aware of there as well. So again, if we're talking about in the 55 plus, especially if you're over 65, we now have this age 65 plus deduction. Key is there's a lot of people think, well, that's a nice deduction, but if I've got a high enough income, I might lose that deduction.
right,
So it's looking at those types of variables and saying, hey, okay, what applies to me? And I think what I talk about is what my role as your advisor is to help you reduce your lifetime tax liability. The advantage we have over Uncle Sam is Uncle Sam only cares about today. The only thing he cares about is, did you file your tax return on time and did you pay what you're supposed to pay?
right,
That's it. That's all there is to it. For us, what I would tell you is, again, if you're watching this on April 16th, it's not done. You get your tax return, you got it filed on time. Don't just shove it in the box in the drawer and never look at it again. Use that tax return as a tool to say, well, what can I do proactively now in 2026 to impact my lifetime tax liability? Should I be thinking about Roth conversion? Should I be making an IRA contribution? Should I be making a Roth contribution? What can I do now using this 2025 as a tool to make better decisions going forward? Because that's really where our advantage is. Again, like I said, the advantage we have over Uncle Sam is we can look multiple years in advance and take action today to impact those years. Uncle Sam's only cares about, did you file on time and did you pay enough? That's
right.
it.
Yeah,
And
yeah.
so I think that's what the other thing I would look at is, what can I do proactively to reduce my lifetime tax liability?
Yeah. And so it's never too early or too late to start doing this, right? So you're right. If even if this is April 16th you're watching this, get in touch with Eric, find out what you can do, because
Right.
if not, you might, it's like walking down the street and just throwing $20 bills out of your pocket,
Well,
because that's
because you
what
think
happens.
about what happens from about, the end of January on when people are filing their tax returns, that's all stuff that's already happened. You
Right.
can't really do anything else. When you filing your tax return is not the job. It's what can I do now in April of 2026 that's going to make my life much easier when I get around to filing for 2026 and 2027.
Right.
So it's being proactive now. What can I do? Because all the opportunities, all the strategies, all those have to be, most of them have to be done by December 31st. If you're waiting till now, the only thing you can really do is maybe you can make an IRA contribution or make a Roth contribution, but that's about it. Everything else is already passed you by.
Right.
So that's why you want to start thinking now, here in the month of April, what can I do between now and the end of the year to impact my tax situation from a positive standpoint?
That is absolutely perfect. That's a great way to look at this. Now, Eric, you have kindly offered everybody a gift, your retirement cheat sheet. Can you just tell us
Yes.
a little bit about that?
So this is a very basically, think of it as just a 2-page cheat sheet, and it's going to have all your contribution limits, what you can put into your 401k or your IRAs, your Roth accounts. What are those limits this year? Because they did change from 2025 to 2026. It's also going to have your tax rates for 2026, whether you're filing single or filing jointly. It's right there side by side. So you can see, if I'm unfortunately going to be getting divorced this year, what do I need to be aware of from a tax rate perspective? So it's got all those important numbers you need to proactively plan on just 2 pages. And you can find that at the simplyretirementpodcast.com/retirement cheat sheet. Gives you everything you need to do to be proactive in your planning.
Great. I'm going to make sure that gets in the show notes so people can grab that. Eric, what's the website? Can you just give us that again if people want to follow up with you and schedule an appointment and talk to you about this?
Absolutely. So our primary website for our wealth management business is blakewealthmanagement.com. And then, of course, the podcast is the simplyretirementpodcast.com.
And it's an excellent podcast. I listen in and I've learned stuff every time I've listened in. So
Awesome.
thank
Thank
you.
you.
Thank you so much, Eric. I really appreciate you sharing your time and expertise because I think this is a topic we need to start talking about all year round, not just on April 15th. But I'm glad you're here talking about it today with me.
That's right.
And thanks everybody for listening into this episode of the Spotlight on the Divorce Expert. Don't forget to like, share, subscribe, and if you have a question or a comment, would love to see it in the chat below.